Hi friends, my name is Rahul Jain. I'm a SEBI registered research analyst. Very recently, in a very shocking media report, HDFC Bank has landed itself into a massive controversy. And this controversy may damage HDFC Bank's reputation and also the confidence of investors. HDFC Bank being number one stock in the Nifty 50, carrying a weightage of around 10% with a market cap of more than 11 lakh crores, has a lot of accountability and their management need to answer a lot of questions. In this video, I'm going to break down this entire controversy in a very simple, easy to understand language so that you get a complete picture of what is this controversy all about and how this may impact HDFC Bank from an investor's point of view. Secondly, I will also speak about how FIIs have been treating HDFC Bank in the last couple of quarters. Very important point. Thirdly, we'll look at the valuations of HDFC Bank and more importantly, the fundamentals, the long-term fundamentals of HDFC Bank, because looking at valuations alone does not give you anything. You have to look at the long-term fundamentals, whether they are improving or they are deteriorating. I'm going to break down in an extremely simple language. If you invest in Indian stock market, this video is extremely important because you really need to understand the corporate governance side of the businesses, especially the banking sector. With that intent, if you like this video, request you to hit the like button and let me know in the comments a simple thank you. Also, hit the subscribe button now while I move to the point number one, which is what is this entire controversy all about. So on 27th May 2026, media, specifically the Indian Express, broke out a news. What did they say? HDFC Bank camouflaged crores as marketing spend to pay higher interest to a state firm. Now, what does this actually mean? So we all know on 18th of March 2026, bank's chairman, Mr. Atanu Chakraborty, had suddenly resigned. We all know, we heard that news. But something was going on before that resignation. In particular, on March 12th, the audit committee of the board had started an internal investigation into a payment amount which was totaling around 45 crores that were made to Maharashtra State Road Development Corporation MSRDC during FY24 and FY25. Meaning, before Atanu Chakraborty's resignation, 2 years back, there were 45 crores of payments that were made to MSRDC, and for that payment, the audit committee started an internal investigation. Now, this is a very important point here. Why? Because FY24 and 25, exactly 2 years before the resignation, this is the exact point that Atanu Chakraborty mentioned in his resignation letter that you can see here, that certain happenings and practices within the bank that I've observed over the last 2 years are not in congruence with my personal values and ethics. Atanu Chakraborty, when he resigned, he never really told what were the specific details of why he really resigned. He gave very blank, headline statements, never really gave any specific after a few interviews, etc. But here, this particular investigation that is relating to FY24 and 25, could it be the reason, or one of the reasons rather, that Atanu Chakraborty did not like the bank's practices? Now, what was this payment all about? Let me walk you through very quickly. So as per Indian Express, going back to 2021, HDFC Bank had reached out to MSRDC saying that, why don't you keep some savings deposits with us? Because every bank wants the saving deposits to come to them so that they can loan out that money, right? Now, at that time, HDFC Bank was offering 3.5% interest on the savings account. MSRDC, as per this report, said that, many banks are offering 6%. Why would we go for 3.5%? You have to give us 6%, And also at that time, allegedly, they had asked for a 5 crore upfront fee, So apparently at that time, bank agreed, And I'll talk about who all were in this particular conversation as per the media report, but bank agreed for a 6.01% of the return to manage this 5 crore expectation as well as the 6% interest rate expectation that the MSRDC at the time had. This was all agreed apparently as per the allegations verbally. Now, since bank was offering only 3.5% interest on the savings deposit to all other customers, while here they have approved 6.01%, what did the bank do? They approved a special bank interest rate of 4.5% for MSRDC. Now, MSRDC started giving money to HDFC Bank savings deposit account, but only 200 crores were arrived in the initial months meaning that the initial commitment that seemed to be around 25,000 crore, only 200 crore were given in that savings deposit bank account, and therefore what happened was this 4.5% window was shut down by the bank in April 2022. But this created a problem. What was the problem? That bank had committed 6.01% as per these media reports, and they only got 4.5%. So definitely there was a difference between what was agreed with MSRDC versus what was given to them. They were only given 4.5%, but they were agreed 6.01%. So apparently the senior management came up with a solution that, the differential of the interest payment, what they will do is they will disguise this in a sponsorship payment for a road safety awareness campaign run by MSRDC, meaning the deposit interest will be given as a marketing expense somehow. There was a letter that was formalized not by the senior executives, by some junior staff members, and verbally it was cleared by the zonal head as per this particular report. And the reason I am telling you all this detail is that if all of this is true, this tells you that how bad their checks and balances were. Even if you're spending on marketing, you cannot have verbal agreements like this. Banks follow a strict protocol of, having a signing authority. But here things were cleared verbally by the zonal heads. Now slowly, MSRDC started depositing more and more money, and it crossed around 3,000 crores in the couple of months in 2023. And therefore HDFC Bank started making a series of payments aggregating to around 45 crores. So this is where this 45 crore differential in the interest comes from, but this was paid through using the marketing expenses as we talked about. One more important point here is that these payments were not routed through the bank's corporate social responsibility team that usually carries out all these awareness programs, meaning that corporate social responsibility approval was also sidetracked. It was not done in this particular case. Also, when these payments were made against invoices that they received from the vendors. And if you look at the invoicing details provided by these vendors, only a single photograph was attached in one of the invoices that were totaling around 9 crores. It creates a question around how is bank paying the invoices of worth 9 crore with just a single photo. Now to sum up this particular report, 3 concerns that this report has raised. Number 1, that it flags a violation of RBI's master directions on interest rates on deposits, that a bank cannot really give differential interest rates to different customers as per the direction of the RBI. That is point number 1, which is the clear violation of RBI's norms as per this particular report. Second point is that it also flags that banks' own anti-bribery and anti-corruption policies has been breached. Okay, and thirdly, it raises a question about the ethics as well, that how can you actually do that you have agreed an interest rate which is higher, and secondly, you are not paying that as an interest, you are actually paying that out as a marketing expense. So it's all about ethics here from a point number 3 perspective. Now in my view, where it gets really ugly is that this report says that the MD and CEO Mr. Shashidhar Jagdishan was also verbally involved in these senior level discussions. Now again, we don't know how true that is, but the report apparently in the media is talking about that. And also CFO Srinivasan Vaidyanathan also faces similar findings. Now if all of this media report is true, then there are a lot of questions that the management really need to clarify. They have to come out publicly and talk about this particular matter, because HDFC Bank is not a small bank, it's India's number 1 private bank, right? Now immediately after this report was published, HDFC Bank, again, there was a statement in the media itself saying that we strongly reject allegations of wrongdoing HDFC Bank on 45 crore payout. Actually, it's not a matter of 45 crore. The amount to me is insignificant here. It's all about the processes that the bank should be following, India's number 1 private bank should be following, that if this is all true, then they have not clearly followed it. But this is the media statement. I really want you to have a look at what HDFC Bank's statement is to the exchange. Now read this statement by HDFC Bank that came out on 20th of May that has been submitted to BSE Limited, and in this particular declaration, bank has not denied these charges. If you read this letter clearly, it's there on this video, please pause it and read it, but I'll read out this paragraph which talks about that. In this connection, we wish to state that in line with the highest corporate governance standards of the bank, the internal audit function conduct reviews, identifies and present its observations from time to time. As such, the observations of internal audit function are comprehensively addressed by the bank, and that applies to the matter in the question. Meaning that internal audit function reviews a lot of issues and bank appropriately addresses those issues. They have not said that the media reports are false. right? If these media reports were false, and if the bank really had the guts and the confidence, they should have come out very clearly and should have said that these media reports are baseless. But here they are not saying that. What they're saying is that we are going to comprehensively address these issues, okay? And also this matter does not have a material impact on the financial statement. Well, that is not the question here. We understand 45 crore might be a very, very small amount for the bank. But is it always about the numbers? No, it is. In my view, when it comes to banking sector, it is all about the ethics, it is all about the trust, it is all about the process that a bank follows, in particular, number one private bank of India. So this is the entire breakdown of what this controversy is all about. How did this came about in the media? How HDFC Bank had really responded to this particular news as of 28th of May. I have shown you all of that. Now, what does this do to the investors' confidence? Let me now walk you through that point. Also speak about the FIIs, what's happening there. Let me then come to valuations and give you good view on the long-term fundamentals. Now, before I speak about the FIIs, I really want to know what is your views on this latest controversy. Let me know in the comments what you think about that. Now, coming to FIs, have a look at my screen, and what you see is that in the March 2026 quarter, FI's stake has dropped by almost 3.6%. It used to be around 47.67% in the December quarter, and then it dropped to 44.05%, which is around 3.6% drop in FI's stake in the March quarter. And FIs have sold around 35,000 crores of stake in HDFC Bank in the March quarter. We know the reason for that in the month of March, Atanu Chakraborty had all of a suddenly resigned from the chairmanship, giving some problems in the ethics and the values that he and the banks were not going along with. And again, there were no specific details, but you know what, when this happens, FIs will lose trust in my view, and that's what precisely has happened here. 35,000 crores of stakes were sold by FIs in the quarter of March 2026, and their stakes have now come down to 44.05%. And to be honest, I won't be surprised at all if FIs remain very, very bearish on this particular bank, given the latest controversy that has happened. Again, the internal investigations and what the bank has to say will come out clearly, and more things will emerge from now on. But as of now, this does not really look good to me. Now, let me also speak about the valuations of HDFC Bank. So what you see is the price to book ratio since almost 2007. Okay. And you see the median price to book has been around 4.2. And clearly before COVID, if you see, the median PB used to be well above 4. Okay. But after COVID started to drop. Okay. And I'll talk about that in particular from a fundamentals perspective. But right now, if you see the price to book, it is rock bottom at around 2. And a lot of people say that from a company's valuation perspective, it looks very attractive, cheap, etc. Okay, everybody has their own view, but do people really understand the fundamentals of the bank back in 2015-16 versus now? Let me actually give you that commentary in the next few minutes. So if you look at the top line growth of HDFC Bank last 10 years, very, very good, 19%. Okay, if you look at the profit growth rate compounded basis, 10 year, 20%, very, very good numbers. Now, when I was doing a podcast with Mr. Ramdev Agrawal, he actually mentioned something very, very interesting that stuck with me. He said that whenever you are analyzing any company, don't just look at the sales growth rate or the profit growth rate, always look for profitability as well. Meaning, look at, for example, ratios, for example, return on equity. And I was looking at that data for HDFC Bank, and to my surprise, back in FY 2015, the ROE of HDFC Bank used to be around 20.4%. It has now dropped to around 14.3%. So almost 6% of loss in return on equity since FY 2015, and that is almost like 25% drop in return on equity. Return on assets have been constant definitely. FY25 used to be around 2. It is right now at around 1.9. But if you look at the return on equity, massive drop. And this is only one of the parameters of the profitability. Let me talk about the second one, net interest margin. Okay, important parameter we all know in the banking sector. Now in the last 6 to 7 quarters, it is hovering at around 3.38%. Okay, and I was reading their annual report of 2017, 18, 19, and I found that at that time, the net interest margin used to be around 4.3%. As of now, it is at around 3.3%. So a drop of 1% in the last few years tells me that their net interest margins have compressed. It's not that they have improved. In fact, they have compressed. Thirdly, if you look at the net NPAs, the metric for the bad debt, if you see currently, how much is the net NPA? Around 0.4%. Okay. Now, back in 2017-16, the net NPAs used to be around 0.33%, 0.28%. Even better NPAs at that time in 2016 and 17 versus where they are right now. So from an asset quality perspective, it's not that they've improved further. In fact, I can see the marginal uplift in their net NPAs, meaning the bad debt have gone up. If I talk about the cost efficiency, in particularly cost to income ratio, it is at around 39.9%. Back in 18, 19, 20, it used to be around 39.7%, 38.6%. So it's not that the cost efficiency has also improved. Now I can continue to go on and talk about a lot of other fundamental parameters, but I've given you the gist of it, that when somebody is telling you that the valuations of HDFC Bank have become cheaper, ask them, what about the fundamentals? Have they deteriorated or have they improved? And these factors that I am clearly able to see, in my view, the fundamentals have not improved. In fact, they have gone down. And maybe one of the reasons the valuations are down. Secondly, of course, FIIs have been very, very bearish on HDFC Bank because of a number of corporate governance issues that we have seen in the last couple of episodes, right? I talked about all of that. So all in all, this is the true picture of HDFC Bank. Here is what I would say to you. Okay, if you have any deposits in HDFC Bank, there is nothing to panic about. There is no need to panic. Okay, the intent of this video was to bring you insights that are out there in the media. I haven't made anything out of my mouth here. I've shown you the data as is presented in the media. And in my view, there is a lot of risk that might emerge from the bank, because the bank's management has to really come out and talk about these issues, give a complete picture, good clarity about what really happened on this 45 crores of the scam that we talked about, right? Whether this was done by them or not done by them. They can't really just give a very headline thing that, okay, we will address this and this is not a significant matter, materially it's not impacting. I mean, they have the right to do that. But is this the right thing to do, that India's #1 private bank reeling through these problems? In my view, this is a big dent to their reputation, the investors' confidence. What do you think about HDFC Bank as of now? Let me know in the comments. More details will emerge and I'll keep you posted as I hear in the media or in the statements issued by the HDFC Bank, so that we are completely aware of what is going in the banking sector. If you like this video, request you to hit the like button, share this with your friends and family. Let me know in the comments a simple thank you. A lot of time goes into preparing this content. And if you have not yet subscribed to my channel, request you to do that. Hit the subscribe button now. I'm going to see you in my next video. Until then, keep rocking.